Golden time zone, huh?
Yeah.
I don't know. Sometimes I'm not sure. But yeah, it makes sense. It makes sense. The market open, the New York open is at 6:30 in the evening. So that's it's okay. Better than 6:30 in the morning. But it is 6:30 in the morning right now, and I choose to be here because the market is nice and slow. Well, the futures market, it's a little bit of fun. You can get into some good positions. Yeah, I don't mind trading at this time. It's actually pretty good. I quite like it. Anyways, all good. Let's get a screen up here. And let me know what questions you guys have. Anything on your minds? Anything you'd like to discuss? It is a slow time, so nobody's really focused on trading and blowing up. So it's a good time to answer questions and get through whatever's on your minds. And we got a screen up. This is MES. Oh, here we go. 30-minute chart. There we go. Yeah, this is a bit of a mess, huh? I don't want to touch this anywhere here. See where it is? It's been choppy for many hours already. And I don't see a setup for the way I like to trade. Actually, the last time this thing set up for the way I like to trade is here, where you had an obvious resistance. If you put the chart like this, you can see that's an obvious resistance. And with these higher lows, then the breakout would be the entry, which happened to be at the New York Open, right about there with a stop right below it, and you got this. Same thing with the Qs. I think I put on a sim trade with the Qs right here days ago. Since then, though, no setup. And this one's the oil market. Let me see. I think I saw a setup on this. This one would have been no good yesterday. To enter long here with the stop below the entry candle, it's too far away. You're getting these higher lows. So it's good, but the stop being so far away, it needs a massive move, and sure enough, it didn't do that. So I think this would have been a tough one. Same over here.
So Avi, that was a small, the one that you mentioned. It's a small consolidation, right? Or
Here?
or yeah, or you're looking at the higher lows.
Yes, that's a good question. I'm looking for two things simultaneously. I'm looking for a firm resistance, which you have right here. The obvious resistance that pushed there and got straight back down. And then higher lows to go back into that resistance and break out. So you're kind of getting it all here. It's not ideal, it's not perfect, but it's there. But then also for the entry, using a 30-minute chart, what I'm looking for is it to break resistance and print a new high, which happened about there. But to enter there, then now where do you put your stop? And the way I like to do it on a 30-minute chart here is put the stop below the entry candle, which then puts the stops down here. In this case, the stop is so far away, it's going to take a few days to get 2 or 3 to R, 2 or 3. So it's just not worth it. It's not worth the trouble. So this is a situation where you don't take the entry. Now, if you look at it here, you have obvious resistance, right? And then going back up to that resistance, you're getting these higher lows. So that all adds up. And then when it breaks out, it would be, let's say, this candle somewhere in here. And again, to put the stop down here is still rather wide. That makes it difficult. You really want to enter when the candles are small, not when they're big. So again, here, it would be a bit of a struggle to find this entry as well as up here. So while it's been moving up and breaking resistance, it's not doing it it's not doing it using the patterns that I like to see. That's why I'm not touching it. I've hardly touched this thing. In the simulator, I tried 1 or 2 things, but that's about it.
Got it.
Thanks. This one's interesting. Yeah, sure. This one is interesting where you get the hammer. But again, I'm looking at breakouts these days, not so much these hammers. But over here, you're getting this minor resistance, but it's not so minor. It's actually very obvious. It's all just in the same place. If you put the chart this way and you're watching this, you can see where it came down and then it started putting in these higher lows, and you have an obvious flat top here. So in this case, you're thinking the new high could be the entry. It's when it does make that new high, if you enter there, when you stop below the entry candle, you're pretty good. That one, the RVR is really tight. Even just getting up to here, you can take partials. And then overhead resistance over here, you can take that target. So this would have made sense, this area. Another one, I think, is here, where, again, these higher lows, it's a little trickier, but it's there. Higher lows, and you have this obvious resistance. Once it breaks a new high, you're entering when the candle is pretty small. Point is, you're able to put in a tight stop. And once you're in that, then your target is up here and then up here. And you can see that's pretty much where it was. So this would have been a huge runner. So if you look at all this in the last, let's say, 1 week, you would have 2 really good setups. And that's all you need. You want to avoid, all these kind of garbage setups. Just wait for the good ones. You don't need to trade every day. You don't need to trade 5 times a day. I'm happy if I get 5 trades in a week, in a month, across all these tickers. It's just easier. And again, remember, these are 30-minute charts. They're incredibly slow. You don't have to, be bothered with going crazy at the open 1-minute charts and getting overexcited and blowing up and all that nonsense. You just don't need it. And also, this is the futures market, which is open 23 hours. So if you take an entry and it takes hours and hours to go, that's fine. Let it go. Don't watch it. Go crazy watching it. I only like to watch it in the beginning as I enter until I can trail the stop into the break-even area. And once it stops at break-even, ideally, I don't want to watch it. I'll just leave the limit orders there and leave the stop there, range orders, basically. And that's it. Makes life easy. So, you do things this way, and I find there's lots of money to be made, especially in the futures market. It's kind of crazy how leveraged it is, and how many good opportunities there are. And like I said earlier, like for me, this is 6:30 in the morning. I can put on a trade now, and by the time New York opens in 12 hours from now, I'm already done. I'm done like 3 times. So all good fun. Here, this is the natural gas futures. Nothing here. You can see no room to the left, nothing going on. It's just chop. Last time there was a setup here, I'd say it would have been in this area yesterday. Well, earlier today for you guys. This looks like a setup. And over here, that obvious resistance. Try and enter this area with the stop below these entry candles is a tight stop, and you're getting into this. Gold. Let's see.
I have a question.
Yeah.
When you say room to the left, how much room on the left do you need to convince you to enter a trade?
It's a question that everyone asks. Huh? All right. Room to the left. Here's a good example. If you look at this gold chart, it's gotten nowhere. It's been choppy. And then it put in this hammer, right? Now this hammer, it sticks out from the recent price action. The absolute low of the recent price action is here. There it is. And you can see, but this is the most recent price action. It's been choppy. When this hammer comes out, it sticks out. You look at the bottom of it, it hasn't traded here in a long time, not since many hours. So in this case, I'd say there's room to the left. Now that's using this hammer right here. Now let's zoom into right here. If you look at this hammer, this one, it's hardly got room to the left because it was just there recently, a few hours. So you kind of gauging it. The way I do it is I gauge it. I don't have a rule about how many hours or how many days. I'm just looking at price action. You can see it's been choppy, and it didn't put in a hammer that really sticks out of all the chop and then goes. This one's it was just there recently. If you look at, let's say here, this one here, you can see there's room to the left. It hasn't been there in a while. Look at that. So you're gauging. What I do is I just gauge the price action. I don't have a specific number for it. On this chart, it's a 30-minute chart. You can see the last time at this hammer, the last time it was here was a long time ago. many candles. Since then, it's made a move and made another move again. And then after that, sure enough, with this room to the left, it went into an uptrend. So that's how I'm gauging it. If you look at, where is it? If you look at it here now, you can hardly say there's room to the left, right? Yeah, it's moving cleanly. It went down and went up, but there's no room to the left here. If you look at this area right here where this price is, there's no room to the left, nothing. If you look at, yeah, this is a fun one. Here's the breakout of that consolidation. Right as it breaks out, massive room to the left. It doesn't want to be there. This is out of its comfort zone. This is the comfort zone, basically, where it's been, and it hasn't moved too much. But then once it breaks out of that comfort zone, look at that, it starts to move. So just think of it like that, as comfort zone. Like human beings, when they're in their comfort zone, they don't like to go anywhere. They're just happy to be where they are. They're not going to go anywhere. The moment they're out of their comfort zone, they're not likely to stay there. They're likely to keep moving or go right back into the comfort zone. So, that's why I like to look at room to the left. Just think of it as human nature, really. But yeah, to answer your question, I don't have a specific number. Like you look at a daily chart, sometimes it looks like for weeks before you see room to the left. You look to the left, and you gotta have weeks of price action. On a 30-minute chart, you're looking at a few hours, typically, like 6 or 7 or 10 hours. 1-minute chart is a different story altogether. So again, just reading price action, and the best way to do it is actually to look to the left, as in like we did just now. Look at price action, open up your screen or open up your charts and look to the left, and just keep zooming further back and try to identify where's room to the left. Over here there is, look at that, room to the left, but didn't really get into the downtrend, right? It kept on going. Over here you can say there's room to the left. Is there? Yeah, looks okay. It went, it came back and went. So here's an obvious one. Look at that, massive room to the left, right here. It never came back there. It just went, it reversed, went the other way. So the best way to get a good feel for this is to do just this. Open up your charts and keep studying it and get a feel for it. And again, different instruments behave differently. That's how I do it. Hope that helps.
Thank you. Yeah, thank you.
So this one would have been a very good piece of price action a few hours ago. If you identify this hammer, and this one happened with room to the left, and it didn't happen after a giant candle. This was basically a consolidation right before it happened. Then the new high is the entry, or the stop below it, and you're in this thing going up. So this is a good reversal setup, and sure enough, it's working. Again, these days I'm avoiding these reversals. I'll wait until it breaks that obvious resistance up there and breaks it in the right way, with the candles being small as well as these higher lows in the picture. Then there's an opportunity there. This could happen later today. Silver, yeah, same thing. Just discussed it on gold. Same thing going on there. This one is the Dow Jones. It's a bit tricky. This is happening though on the short side. If you look at this, there's firm support down here, and you're getting these lower highs. Let's see if it breaks down with these lower highs in play, and you get a decent candle for the breakdown. You can enter the short, but you want to be careful here because you know that you have support just nearby. So you're not likely to get really good RVR on this one. So even though the setup may be there, the reward side may not be there, and then you don't enter this. We were discussing this yesterday. I think Sujit brought it up. It's tough to trade this, the Dow Jones. It does make some pretty wild moves at times, like up here suddenly and then suddenly down. Here's another big fast down move. But it's hard to get these good setups with this instrument. It's almost like trading a low float, but it is the Dow Jones. So be careful with this. This may be one I don't really look at anymore. Just the Russell 2000. I find it to be similar to the Dow Jones. Quite difficult to pick up on action here. Over here, this is interesting. If you look at this resistance area right here, and then you're getting these higher lows. When it breaks out, if you enter there with a stop below, it would still be a bit of a struggle because it's quite wide. Sure enough, the move worked out, but it would have been a tough one to enter because the stop is just a little wide and your target's in this area. You have something like that happening here. But again, this would have just freaked you out, stopped you out quickly. That's a tough one. You have this area here. You may have entered right here, actually. But yeah, with the wide stop be too wide. Here's the entry that makes sense. So prints a new high, you basically enter at the bottom of this candle, right about there with the stop below it. Now you got a good one. This setup is decent. Again, these are just breakout setups. Also, again, if you look at, let's see, over here, the bottom of this candle, this hammer right here, you're getting room to the left, right? At the bottom of it, right there, where the buyer stepped in. Hasn't been there in a while. So it's doing this consolidation, but then it put in a candle that's stuck out of the consolidation. And sure enough, the move began after that. So using naked trading, this is it's a good little area. It's a simple way to trade. The problem is, as you can see, if you're using this naked trading stuff on a 1 minute chart, every 5 minutes you're getting a setup, right? And that's the danger. You want to be very careful with that. That's why when I was doing this on a 1 minute chart, I was using levels and various things to make sure I don't just get into the chart anywhere. So many specific places. On a 30-minute, these setups are not so common. So really, I'm just waiting for them to happen. I'm not using levels at all. I'm just simply using the setups. And they're quite all right. Don't have a problem with it. Oh, this is crypto. What happened to crypto? It jumped up a few hours ago, huh? Anyone in the news? Anyone know about crypto today? Well, this is crypto futures, Bitcoin futures. So the price of Bitcoin obviously would have jumped. Now, this is tricky over here. It's just like watching the pre-market in the New York session. You get this consolidation quite typically in the pre-market. Then you just wait for a breakout up or down. And that works for scalping the open. If you guys really want to do all that stuff, this is what you want. You want a ticker that has a catalyst that made it jump overnight and then consolidate before the market opens, and then you wait for the breakout up or down. And you get lots of momentum, lots of volatility, lots of blowups, but lots of excitement if you like excitement. Me, I'm here to make money, not to get excited. So this is what's there. See, it's holding above that area. See that resistance, and it's holding above. So it could be that this resistance may turn into support, setting up for a good move to the upside. Did that here too. This gapped up, and it held above that previous resistance, just shot up from there. I don't think there's a way to enter here, but oh well. Anyways, Bitcoin futures. I don't know if I'll be ever trading this, but it's good to watch it. See if it makes sense. This is FX, foreign exchanges, euros in USD terms. It's a tough one to trade, I think. Got a hot mic, Saber. This is a tough one. I doubt I'll be trading this. Sometimes when you have great big political news, you'll get something on this. Anyone in here got experience with the FX market, foreign exchange? Anyone tried to trade that? Nobody. Everyone's terrified. It's a tricky one, as far as I know. All right, that's all the sim stuff. I've got a position on. Wait, where am I looking? Wow, I've got a position on in silver right there. I think I put this on half an hour ago and forgot about it. Let's switch to the live account. There. Okay, that's it. So silver futures. So that's the resistance and slightly delayed entry, but basically as it broke, got the entry, and I put the stop below the breakout candle right there. So let's see if this thing runs. My first most interesting thing is to be able to bring the stop into break even. So once the price departs this area, starts to break out, put in a new resistance breakout, I can start moving the stop in, bring it to break even, and then you're just in this thing. So that's the trade management of it. And let's see. Let's see what happens. All right, back to sim before I accidentally click on anything. Keep doing that. All right, what do you guys want to look at? Want to look at screenshots of yours, trades you've taken, trades you'd like to take? Anyone? Or psychology? That's actually the most important part of it all.
I would say psychology is more important.
Yes, it is. Yes, it is. You can see with trading, there are a million different ways to trade, right? I was just sharing with you the breakout strategy that I'm working with at the moment. So that's only one way. You guys have seen me trade a million different ways over the years. But in the end, you gotta stick to a way, well, you gotta use a way that keeps your head in the right place. So that's psychology, strategy, or a style that that is aligned with your personality. If you like to go at a slower pace or a faster pace, you got to be aware of these things. What kind of pace do you like to work at? And then build out your trading style so that you're not fighting yourself, so that things come naturally. So when you're looking at this, it's, you're not having an internal battle. Should I enter? Should I not? Oh my God, it's gonna go without me. All that stuff. You don't want to be in that situation. You want to be nice and easy about it. If you in that situation, you're probably in looking at a time frame or an instrument that moves too fast, most likely. So that's the key thing about trading. There is no correct strategy. There really isn't. It's all about what can you do sustainably that fits your personality, that aligns with your belief system. And then you're just not fighting it. So for example, I do believe that the market is absolutely random. Like every strategy works 50% of the time. Absolutely everyone. Okay. So then for me to go and put a million indicators on my charts to try and get guarantees that something's about to move and all, it doesn't align with the way I think. It doesn't align with my belief system. So it makes no sense for me to have indicators there, and every indicator is telling me something. And sometimes they contradict. Actually, a lot of times they contradict each other. So what's the point? And so I don't bother with all that. It's my belief system that things are completely random. All I got to do is make sure my risk is minimal compared to my reward. And as far as the technical side of it, just make sure it's not draining me. So looking at candlesticks is not draining. It's really simple. There's only one indicator. There's only one thing it's telling me. It's either breaking out or it's not. Or, well, there's only two things. It's either in a consolidation or it's in a trend. That's it. So there's only two things. Once I figure out which one it's in, then I can put on the risk, make sure the risk is small and the potential reward is massive. That's it. To me, that's all that's in my head. Anything beyond that, like it's holding above VWAP or the volume's increasing or you're getting the signal on the tape or there's a big order on the level 2. Once I put all of that into the mix, then my head gets confused. I'm like, well, is it a long? Is it a short? Is it actually going to go? Is it not? I don't know. I'm not sure. The volume is supposed to be larger than before, but is it how much larger? And then you start second guessing yourself and your own belief system, which is, for me, is just the market is absolutely random. So
yeah, right now I'm going through that phase only.
Yeah, trying to figure out which indicators work.
Yeah, I'm struggling right now. So yeah.
Figure it out with your belief system. Start there first. What makes sense to you? You've been around the markets long enough. You've seen a few things. So what makes sense to you? What is the one thing or a couple of things that really stick out from your experience? They're like, oh yeah, this is obvious. This tends to happen more times than anything else. Start with that and then build out your indicators and your platform and everything to align with your belief system. And then you trade on that. You will still have a 30% win rate, just like everyone does, or even less. But at least you manage the risk and the winners are fine because you manage the risk, the winners naturally get bigger and you make money. But if you start just copying someone else's trading style, some internet influencer, YouTube viral video or something or the other, I guarantee you'll probably have one or two successes up front and that's it. You blow it all up very quickly because that that whole strategy is not yours. It doesn't make sense to you. It's just a copy paste for you. And the moment it starts not working, you're going to blow it up. You're going to start making bad decisions. That's why it's important not to fight yourself when you're trading. It should be nice and slow and simple. Well, for me, slow and simple, that's what makes sense. But so you got to figure out what makes sense for you.
Yeah, sure. Thank you.
Yeah, absolutely. That's how you, man. That's the most important thing. You got to keep it really simple. Simple so that you're not fighting yourself. That's what I mean by simple. It should align with your belief system. If you truly believe that the level 2 is what makes the market move, like the price always wants to go towards liquidity, and then all right, put the level 2 on the order book and use that as your primary indicator. Nothing wrong with it. I did that for a long time. And again, it's all about your belief, because then you'll confidently be able to put on the trade, tighten up the risk, and confidently hold for the target so your winners are bigger than your losers. That's what you want to do in the end, right? That's what your execution should look like. If it doesn't look like that, then you're not going to make it. So that's important.
Hello, hey, can you hear me?
Yeah, Amal, go ahead.
I just wanted to ask you something because sometime before you used to trade Fibonacci levels on the 5-minute chart, and you're making good money. The strategy was working. What made you kind of switch to a now 30-minute a very slow pace, and how do you feel that switch from a very fast-paced 5-minute on an intraday versus a 30-minute slow pace? Because how did you think about that switch pretty much?
Yeah, so that switch, you know what? It wasn't so much a switch from a time frame, but the switch on how far my trading went. And it got to a point where there was no liquidity left in the market. I was doing the options market, and I didn't have enough liquidity on these Mag 7 tickers, so I switched only to the SPY, which had more liquidity. But even that wasn't enough, so I went to 0 DTE SPY trading. And that's where the most liquidity is in the options market. And it turns out that my trading got so big that even there's not enough liquidity. I struggled to enter and exit positions. So I hit a wall, basically. I went as far as I could possibly go with that kind of trading. I mean, there is no market big enough. I went as far as that's allowable. So liquidity and leverage, that combination of liquidity and leverage was, I went as far as I could. So since then, I've been looking for a way to get bigger my trading, to continuously evolve my trading, to be more profitable and less risky. And so with that agenda, I've landed up here in the futures market. The futures has a lot more liquidity, and it turns out it's a lot more leverage than I ever thought, much more than options, which is something new. At least for me, that's a new idea. And then what I discovered, of course, is the futures market is open 23 hours a day. And so now to trade the 5-minute or the 1-minute chart 23 hours a day is pretty intense. It's not something I want to do. I realize I'm not going to be sustaining that. That's too much. So the way to take advantage now, 23 hours of the open market, and to be able to go through the entire trends with its ups and downs and capture the majority of the move, is to actually zoom out of it completely and look at these longer time frames. So put on the size with the leverage and the no issue with liquidity, and then just leave it to go hours and hours and hours. If I'm looking at the 1-minute chart for, let's say, 8-hour trade, I'm going to go crazy. So I'm not going to look at it, even for the entry aspect. So putting that all together, I've landed up here on the 30-minute chart, which is a very comfortable time frame. I'm very used to it. I've been using it for years. And now to be able to just execute the 30-minute chart and leave it alone, it's working very nicely. Most just been sim trading this stuff in the last couple of months, or putting on small size. Like today, I've gone on the silver position on a small size, and just leave it this way. And so far, I really like it. It's actually working out where I'm really not too bothered about trading. I can just pull up. If it's there, it's there. If it's not there, no big deal. I'd take 2 trades in a week, and I'm just kind of evolving into this style of trading based on my agenda. Agenda is to be very capital efficient, so that means using leverage, and also being able to capture massive moves. Now the instrument just allows slower time frames and longer moves. So that's kind of where I'm going with this. That's how it's evolved so far.
Got it. So it's mostly, I think, from what I heard, it's the time frame that you're comfortable with. Because even with the futures, you can still trade the similar strategy at the similar time frame based on Fibonacci levels as well, right? Because I've been trading that for quite some time, and I kind of like, I think I'm kind of getting it. So you think we can also trade futures with that too, right? On the same like time frame and same strategies.
Well, yeah, I don't see a problem with it. I don't see a
Okay.
problem at all. I don't know how to get those Fibonacci levels anymore. I mean, there's various platforms to get it from. I'm sure people are getting it. I've just not been bothered.
Okay. Because
There's
for
many-
me, like, it's working for me because if I'm wrong, I just really want to get out maybe like in 5-10 minutes. I don't have the patience to hold for a very long time, so I think that is kind of helping me because if I'm wrong, I know I'm wrong and I'm just out. But if it works, I get like 3 hours, 4 hours sometimes. So yeah, it's kind of good.
Good. That's working for you. So that's good. I'll tell you one thing. Over the years, I discovered the more I detach from trading, as in the less I watch it, the less I try and control the trade, control it after I enter, the more money I make. It's actually
Yep.
quite simple. So you got to find a way to detach. You got a live position, and yes, you want to know what's happening. If you made money or lost money, you really want to know. But the more you build the discipline to not be bothered about it, the more money you'll actually end up making. Because you're not going to end up partialing when it's gone in your favor. You're not going to end up changing your mind about it, halfway through a trade. You're not going to be prematurely stopping out, or also on the other side, moving your stop out of the way because you believe maybe it'll go back in your favor. You'll just stop doing these things. All these blow up habits, basically. And these habits where your losers are as big as your winners. You're never going to make money that way. So again, detaching, it's all from that Zen Trader book. It's been really powerful. It's how my trading's gotten so much bigger so fast. It's ridiculous. That's the one thing that's made it much, much bigger.
Yeah,
So
I'm currently reading that book. It's really nice. I'm kind of halfway there, and yeah, it's a great book. I think I'll read it again.
yeah, good. Yeah,
Nice.
pay attention to that. Again, I'd say if there's one psychology book out there, that's it, man. Forget about all the others. Just focus on this one. Because this is really, it's the most important point. It's basically detaching, removing the human being from the random price action. Because in the end, really, it's the price action that just triggers you into poor decisions. But so that if you're not exposed to the price action, you're not going to make poor decisions because you don't know what's going on. You can't make a decision. All you know is that there's a position on, and that's it. So it's really great when you get into that, and so practice that if it helps. Actually, it tends to help most people is downsizing your position, the amount of risk on a trade. Lower it, maybe put on half what you're used to, and that actually helps practice detachment because now you're not bothered about it. So if it loses, it's a small loser. If it wins, great. You're not going to take it off. You want it to run, so it's actually a meaningful trade. So then you build this habit of putting it on and not watching whether it stops out or it runs. Once you build that habit, then you upsize again. And now you're working with this new habit, and everything gets bigger. So think about that. That might help.
Yeah, that makes sense. Thank you. Thank you very much.
Sure. Dennis, you want to look at MNQ, I think, now? All right. Yeah, we looked at this a little while back. It's garbage. Look at this. It's nowhere. There's no room to the left. It's just in a chop zone. It got super choppy earlier. This looks like there was news on it. Anyways, just leave it alone. This is not a place to touch it. I was saying earlier, the last time I saw a setup on this here, this was a good setup for the breakout, and sure enough, it worked. But since then, it's been tough to trade. Just leave it alone. I don't think I'd be interested to touch it until it breaks the high or a low here. These two areas. Might be a few days. I don't know. Yeah, this is a mess. On a 30-minute, at least on a 1 minute, I'm sure there's scalping opportunities, but I'm not into that. Rahman, man, what are you doing? You got a hot mic. You got a new microphone you're testing?
Whoops.
You make a
Yeah.
visit to, you go back and you're all noisy, yeah?
That's right. How are things, man?
All good, man. It's good to be here.
Oh, good.
Yeah, this is good. I like these morning sessions. Again, quieter. We can discuss more things in more depth rather than everyone freaking out about actually trading too much. And yeah, the lines. So the plan is on Wednesdays, that's today, and Fridays, we'll do these sessions. And I'm not likely to be there at the open, which for me would be 6:30 in the evening. But the other 3 days of the week, I'll be there at the open, the New York Open. So we have these 5 sessions a week at least. Let's see how the schedule goes. Let's see if it works for people. We'll move on. Yes, Dennis, that's the book, The Zen Trader by Peter Castle. Correct. Yep. That's a very good book. You see, that's the thing, guys, about the trading industry is you'll get a lot of noise on the internet, which you guys are sure, I'm sure you've heard of, you've seen a lot. And what you don't know is that beyond the noise, there are so many outstanding traders who don't make a noise on the internet. Instead, they may just put out a book like this, or you may hear of them once in a while on CNBC or something. These guys are really focused traders. I mean, there's a reason that these guys are 8-figure traders, 8-figure, 9-figure traders making millions and millions, is because they're not fussed about making a noise about trading. They're just fussed about trading. So it's those guys you want to seek out. Actually make money trading, not actually make money selling stuff on the internet. So that's how I do it. That's where I find my information. So look at that stuff. And Peter Castle is one of them. Tremendous amount of experience. He went to Japan and figured out mindset and all that stuff. And started applying it to trading like 30 years ago. Very interesting. He does not run anything beyond. He just has this book and then he just trades. That's about it. So it's people like that I tend to pay attention to. Careful what you run across on some viral YouTube video and stuff. That's not usually. It's not something to learn from, typically. So, but you guys are smart enough. You know how the internet works. What do you think? Amal, you have to stop looking at X. It was affecting trading. Social media distracts you. Yes, it does. That's right, Amal. Social media is very distracting. I mean, even just looking at CNBC's YouTube channel or even their website, it'll get you all biased about something or the other, right? You want to be careful. You want to trade, you want to make money trading, then focus on trading. How do you learn how to focus on trading? Well, focus on people who focus on trading and maybe learn a few things from them. That's how you do it. All the other stuff that's all right. It's good to find people you can trade with. That's fun. That's good. It's good to be able to communicate and connect. But if you're in an environment where you're constantly being sold something, a new book, a new program, a new course, nonstop, well, clearly the people behind that are trying to make money selling you stuff, and they're not truly evolving their trading. Maybe they know a bit about trading, but really, you're only there as a customer. You're not there as someone they are trying to help. These are the things that you guys have all seen this in the trading world. I've seen plenty of it. I'm so fed up with it. I don't even care anymore. I'm just happy we have a good group here and we just do this nice and easy. Don't want to be bothered with any of that stuff. So just focus on trading, and really, what you focus on is where you will make progress. You'll make progress on that. So take it easy and just remain focused. Don't get distracted. All right, MES, nothing here. I have these 1-minute charts here, but this is more for talking with you guys when we're at the open. Never used them. This is the NQ thing. Who's it? Dennis, are you asking about the NQ? Well, yeah, you can see on the 1-minute chart, it's been a bit messy, choppy, but then you had the breakout maybe, 10 minutes ago? If you catch the breakout here, going up for resistance there. But you can see how tiny this is compared to what I'm trying to catch. Look at that little breakout and all. That's just this tiny candle right here. I'm trying to catch moves like this. Yeah. So that's why I don't bother with 1 minute. Again, that's also distraction, right? Get caught up in the small stuff, then you don't see the big stuff. And the big stuff, man, once you do that, you just don't have an appetite for the small stuff anymore. What was it? There's a saying, a little thing that I read recently. For a cat to turn into a lion, it must lose its appetite for rats. It's something like that, I think it was. So there you go. Once you taste the good stuff, that's it. That's all you want. You're not bothered with the small stuff. So for me, that's, you know, multiple 6 figures on any single trade, and doing it on a bigger time frame where I don't have to be stressed about it. Really, that's it. Everything else is just small. So I'm always just pushing that direction, pushing that agenda more and more. Oh, look at this in the oil market. No room to the left. It's just stuck there, but you're getting that flag, right? What's been bullish, and then the pennant. How many times you guys have seen this in books? It's in every single book. But again, I don't like trading this. It's unpredictable. It's popular, but unpredictable, I think. So what I'd wait for in this case is, again, that resistance up there. Let it get up there, break out the right way. Then I'll get interested. Or if it gets down here, you have that support down there, and break out the right way. I might be interested. Yeah, and that's, again, very interesting. This is the most popular trading pattern you'll see anywhere in the world. It's everywhere. And I've tried it on all time frames, and I find it to be the most unpredictable thing. Must be exciting or something. That's why people like it. What do you got here? Amal, a cat that dreams of becoming a lion must lose its appetite for rats. There you go. Perfect. Thank you. Yeah, you got it. I don't know who said it. Someone said it somewhere. It's a good one. Thanks. Yeah, like you'll never find me trading Tesla or Nvidia ever again. It was just a waste of time. Oh man. Natural gas futures. This one is interesting, especially for this time zone. As in trading now, when it's basically the U.S. market's closed, I find these energy tickers could have a move in. You have the Asia session and then the London session, all that stuff. They tend to move. Today, right now, nothing though. Gold will be interesting. I'm going to keep an eye on it for up here. If it gets up here, this might be in a few hours. There's a long in there, probably. Silver, it's just sitting there. I'm in a live position here. Entry is just about where the price is now, so just sitting there. That's no good. That's no good. Crypto, what a mess. And Forex, not much. Oh, there's a double bottom in it. If you guys like double bottoms, I don't do that anymore. Here, I'll show you the pattern. So what you're looking for in a double bottom is a reversal. So it's been in a downtrend and then reversed to go up. And what you want is one bottom, then you want a second bottom, which is higher than the first, so you have that. And you want a nice gap in the middle, a nice arch, which you have that. And ideally all that at a key level. So looking to the left, it's in kind of an area where it bounced from earlier. It bounced down here. You can see where this was support turned, this was support turned resistance and breakout again. So it's an interesting area. And so once you get this whole pattern set up, then with the second bottom, you want a bullish candle. So that's this one, this first white one, genuinely bullish. No wick, no bearish wick on it. So then the new high is the entry. The stop below it, and you'd be in this one. And then if you like trading reversals, this one's a good one. I basically stopped doing this. Wait for genuine breakouts. But that's a good one. You guys have seen me trade this a million times, right? On the 5-minute chart, 1-minute chart, all the option stuff. Anyways, it's all there. Cool. What else is on your minds, guys? Got a beautiful sunrise here in Dubai. I might go to the beach after this. Looks nice out there.
It must be the best weather out there, right?
Oh, it's beautiful. It's beautiful, man. It's so good, so comfortable. Yeah. It's ideal. It's not too hot, not too cold. It's just comfortable.
Yeah.
Yeah. Get out in nature, go to the beach, go surfing or paddleboarding. If there's wind, go windsurfing. And go to the desert. It's great. Go camping. It's cold at night, but that's comfortable also. And it's a good life. Winter is when you want to be here. It's just summer that you don't want to be here. So it's very good. I don't know what you guys are doing, man. Most of you are in Canada, I think. Yeah, North America is.
Ever since I came back from Dubai, it's just been pissing rain here, man. Cloudy and gloomy. Oh my god, it's so depressing here, bro.
You should have did what Sunny did. He came for what, a week. He stayed 2 months.
Yeah. Yeah, I wish.
Yeah, work it out. Now we have a few people in our group here who moved from Canada to Dubai, Abu Dhabi, in the last 2 years. So take a look at that. See how you can do that. It's I think lifestyle is really great here. The environment is great. Politics and all those things, if you're into it, is not so troublesome as North America. And all the tax-free stuff that's available too. Weather's mostly very good. And very diverse environment. It's not an echo chamber of protesters, basically, which is now what North America is turning into.
Yeah.
So it's very, very good. I'm very happy to be here, constantly meeting good people. And time zone is comfortable. They're also very well located geographically, connected to the world. They're basically in the center of the map.
Yeah, that's true. That's a big one.
Yeah. So it's very comfortable. I'm happy to be here. I'm choosing to be here. I could be anywhere in the world. I'm just choosing this. And a good place to raise the kids and all that. So, yeah. Yeah, you gotta make the move too. There you are. Make the move. I mean, start looking into it. There's so many policies, that the immigration policies here in Dubai that are in place that make it easy. Different ways of getting a visa, a 3-year visa or 5-year visa. They're so easy to get nowadays. So you can look at that. Freelancers are getting them. People, kids out of college who are 22 years old with no experience, no nothing. They're getting these kinds of visas, just showing up here and building a life. So, Dubai is making all that available. I think that's great. The other side of it, all the billionaires from Europe are finding exit plans and showing up here, finding ways to get out of there because of course they have all kinds of problems. So I think it's good. It's only gotten better since COVID. It really changed a lot of things. So, while the world improved, it can be. It depends. What I like is it's the opposite of New York. New York is expensive, genuinely, and it's really hard to find a way to live in an inexpensive way in the city, in New York City. You got to really go out to New Jersey or something. But Dubai, the interesting thing is it can be 10 times more expensive than New York, or you can find a way to live with 1/10 the price, 1/10 the expenses of New York. It's not difficult. It's a pretty large city. You drive 10 minutes out and rent is half the price. And you're only 10 minutes away as far as driving is concerned. So, it's a really incredible thing. I think it's much more diverse, even in that sense, than most people think. So we have a whole wide range of incomes in Dubai, and everyone lives. Nobody has to get out and stay an hour outside or something like that. So, look at that. Again, what's popularized is all the glitz and glamour. But, I mean, shit, you never find me in that stuff. I never go to downtown and get involved in that stuff. It's just a waste of time. Anyways, I'm not 22 years old anymore. But, you really can live a very simple lifestyle here. I like that. You don't have to get caught up in the noise. Just like in trading. Right? You don't have to. Oh, you know how safe it is? Yeah, it's super safe. Wasn't it ranked, I think, recently one of the safest cities in the world or something? Anyways, yeah, I grew up here in the 80s and 90s, and it was safe even then. Everything's just, all the crime stuff, you're getting your hand cut off on the street so they can take your watch. That happens in London, even in New York. Not here. You never hear those things. There's no risk of that sort of thing. You can walk down the street at night, no big deal. Not a problem at all. And of course, education, school, all that stuff is available. It's all good. So I don't have too many bad things to say about here, except the summer's pretty hot. And that's when you travel. But yeah, overall, pretty good. Nice and comfortable.
Thanks, Avi. I'll go to bed now.
All right, yeah, get some sleep, man.
See you tomorrow. Yeah. Bye.
See ya. Cool. What time is it here? It's coming up on 7:30. Anyways, what else y'all want to discuss other than immigration? Cool. So I count you out too. All right. Thanks for coming. Anyone got anything else you want to discuss? Because what I'll do is then we'll keep this session. This is Wednesday, and the same thing on Friday. So today, Wednesday. It's Wednesday for me. Wednesday. So I won't be showing up for the open. We'll do these sessions instead, Wednesdays and Fridays. Cool. Everyone good? Everyone know what we're doing? We're trading?
Yes, sir.
Good. All right. Good. Keep your head on your shoulders, guys, and make sure you trade in a way that makes sense to you. Don't just go copying popular stuff out there. That's really, really important. And then you'll be fine. You'll be just fine. Cool. All right. Thanks for hanging out, guys. We'll end this one.
Okay, thank you, Amy.
Welcome. Thanks, Avi. Later.
See you guys. Thanks.
Okay, see you guys. Bye.